Welcome to the Capital News. I am your host, Alex Commodities. Today is Thursday, March 11th, 2021. Thank you so much for joining me. The title of today's podcast, Markets Rally, $1.9 trillion signed, jobless up. Initial jobless claims came in for the prior week at 712,000. 712,000. The prior week was revised upward by 9,000 to now stand at 754,000. And as I mentioned to this audience last week, with last week's bad number, obviously now it's 754,000, I said, jobless up until we at least hit the levels where we were during the depths of the great financial crisis, which was at 650,000, 660,000 for a couple of weeks. We have been north of that number, really north of 700,000 for the past year. Literally, the past year. We are hitting the one-year anniversary of all of these shenanigans with these lockdowns and restrictions. That's how bad this situation remains. It doesn't matter how much we have spent, borrowed, and printed over the past year. We still have chronic and structural unemployment and underemployment. And now all of a sudden we're supposed to believe that because President Biden signed into law this $1.9 trillion piece of garbage, which of course he was supposed to sign tomorrow, but I guess under promise and over deliver. Good job there, Joe. Or maybe he's just too tired and he had to sign it today as opposed to tomorrow. But nonetheless, it's signed. And checks, or at least direct deposits, are supposed to start going out perhaps as early as this weekend. Phenomenal. Celebration. Money we don't have. Send it out all over the place. And one would think with all of these massive spending programs at the fiscal level, and even some of them at the Federal Reserve level, remember all of those emergency facilities, the Main Street lending facility. Of course, Main Street doesn't get any of it. Basically, you have 100% of a pie, right? I think at this juncture, they may have used about 7%. 7% of the funds available to assist small businesses, Main Street. So what are they doing? They haven't even exhausted all of the funds that they have thus far appropriated. And yet we continue to add more to the pot. What is going on here? Well, a massive wealth transfer is what's going on here. That's exactly what's going on here. This is criminal. This is the wealth of the nation being stolen right before our very eyes, and people are applauding it. Why? Because people are being paid off. You're getting your sit down and shut up money. That's what this has been from the very beginning. That's what it remains to be. And this is not free. We talked about the inflation report that came out yesterday. Not that we're so obsessed with the numbers in that report, as I explained during yesterday's podcast, but more so just to set a benchmark, a baseline. This is what we're going to look back to once we really start to feel all of the effects of all of this spending, borrowing, and printing. Because we're going to feel it. And it's going to be extremely expensive. It's already being felt around the planet. And it's already being felt here in the United States of America too, but nobody wants to admit it. This has been here. Inflation has been here for a long time. The effects of inflation have been here for a long time. The inflation obviously continues to crank out at the printing press. That's what inflation is. It's an increase to the money supply. And I'm going to jump the gun here a little bit because typically on Thursday, we go through the initial jobless claims report, Fed's balance sheet, and M1 and M2 money stock. Well, here we are another week, folks, and we do not have updated figures for M1 and M2. And of course, the Federal Reserve has recently changed the definition of these monetary metrics. Geez, I wonder why that is. Now, I'm sure these figures will eventually be updated, and of course, we'll have that discussion. But isn't it just coincidental that the Federal Reserve starts to counteract and starts to question the official data coming out of the government with respect to the unemployment rate at 6.2%? No, says Jay Powell, chair of the Fed. It's closer to 10%. So dismiss that one out of hand. I don't know whether or not they're going to believe the inflation figures. They might say, well, I think they're overstating it. I think it's actually lower than that. And of course, they're going to strip out food and energy prices and anything else that it takes to live on this planet. So whatever suits them. It's just a joke. Oh, yeah, we're helping the little guy. Give him 3, 4, 5% of, billions and billions of dollars that you supposedly have allocated for them. Yeah, we care about the little guy. The data. We don't want to pay attention to M1, M2 anymore. We're going to change the definition, and we're going to withhold weekly updates for the past few weeks. Something fishy going on here, maybe just a little bit? Maybe just a little bit. And, of course, our president, announces today, too. Well, he is hoping that by May 1st, all adults can be eligible to be vaccinated. Yeah, your body, your choice. I'm not doing it. You want to do it? Good luck. I'm not doing it. Did you see the AstraZeneca vaccine is being postponed or is really being basically barred from some countries because it causes blood clots? Fantastic. You have like a 99.9% survival rate if you should contract COVID-19. But no, get the vaccines and deal with being an experiment, a guinea pig. Again, your body, your choice. But I've been against this from the get-go. I don't trust these people. I just don't trust them. And every day it's as if we're buying 100 million more doses. There's a few 100 million Americans in this country. Yeah, you got to get jabbed twice. Okay, so that's 600 some odd vaccines you have to purchase. But the J&J vaccine, that's supposedly a one and done. How many of these things have we bought? I mean, talk about the swamp not being drained. Talk about really sticking it to Big Pharma. They're making out like bandits. And we're guinea pigs in this experiment. And you can't sue them if something should happen to you or a loved one. They're exempt. They're the ones who are immune from any type of repercussion. You're the lab rat. Good luck to you. Unbelievable. I just do not trust these things at all. I don't. You can think of me what you will, but I've been sticking to my guns on this, and I'm not going to change anytime soon. Just not going to do it. Because it's the people who, have underlying conditions to begin with who are at high risk. We know the data at this juncture. This isn't a game anymore of unknowns. We know the data. We've been going through this in a year. Now it's the games with the masks again. Fauci, out from the outset. Now you don't have to wear masks. Oh, now you need to wear masks. Now, after a year in, you got to wear 2 masks. These people are making this stuff up. I mentioned either earlier this week or last week, I said, I think this is really just a grand Milgram experiment. And I'm going to have to go through that experiment for those of you who are unfamiliar with it. But basically, I'm not going to do that today. But basically, just the gist of it, it's an experiment that sort of questions how people respond to authority figures. Well, of course, the government is the granddaddy of authority figures, maybe next only to religion, maybe. And of course, to some people on this planet, government is their religion. So talk about being mentally disturbed, those who think government is their religion and is the panacea for everything that ails us. It's crazy. It's crazy. I can barely even watch the news anymore. Any of these stations, I don't care what it is. I don't care if it's Fox News, CNN. I don't care if it's the financial media. I can't do it. I put these stations on mute most of the times just to read some of the headlines, some of the things going across the screen, and I'll read the closed captioning. I don't want to hear these people. It's ridiculous. It really and truly is. And of course, markets continue their rally today, basically market highs across the entire board in Wall Street, all of the major averages, indexes. I thought there was a rotation out of the NASDAQ. I thought there was a rotation out of the tech stocks, out of growth stocks. Because the economy is going to start opening up and everybody's not working from home anymore. People are going to go out, so we don't have to plow all the money into them. Now you're going to go into the industrials, energy, you're going to go into value. What a load of crap all of that was. They're plowing right back into it. Again, the narrative that you have to focus on is the liquidity. And of course, we don't have that data because the Federal Reserve isn't giving it to us for the past couple of weeks. No update to M1 or M2. Not since February 23rd. Geez, I wonder why the stock market's going up. Oh, yeah, I mean, now you got the passage of this piece of crap. 1.9 trillion is going to flood the system. $1,400 checks. I mean, how many companies are on the verge of bankruptcy, trading at $1, $2, are going to end up being worth $100 a share next week once everybody gets their money? This is ludicrous. And you still have people that have the audacity to go on the media and say that this isn't a bubble or that this is the most hated bull market in history. What drugs are these people on? What are they taking? How much are they being paid to say this stuff? Because it has to be hefty. And there's a handful of articles across the media today bashing gold, bashing silver, saying it's dead, Bitcoin is the future, I'm not buying into that for 1 second. No sirree. No sirree. I told you, I understand my lane, I understand what I understand, and I stick to it. And I am not deviating from my call on precious metals and commodities. I am not moving. I am a patient man, and I can stomach a lot of volatility, believe me, when I tell you. And I don't care what Bloomberg, Fox Business, or any other idiot or any other organization puts out there telling me that gold and silver are dead. No. And that I'm supposed to pin my hopes on Bitcoin. Something that has been around for a decade, while we're in the midst of the largest financial, social, and economic experiment ever conducted. I'm supposed to pin my hope on Bitcoin? Give me a break. That does not pass the smell test for a second. For a second. But you know what has proven the test of time? Gold and silver. You know what is needed? Commodities. I'm not moving. Good luck to you if you're involved in Bitcoin, but don't tell me it's a store of value, because the story with Bitcoin is always changing. It's always changing. It's a currency, yet it's backed by nothing, yet that's supposedly the argument with fiat. Fiat's not backed by anything. The dollar's not backed by anything. The euro's not backed by anything. What's the Bitcoin backed by? Nothing. You can't touch it. It's not backed by anything. Now it's a store of value. No, it isn't. It has no intrinsic value. This is ridiculous. One thing after the next. Market performance. Dollar index 91.72. It is gaining 1/3% in the overnight trading session. Bitcoin is at $57,000 a coin. And broad dollar strength against the major currency pairs, again, across the board. So strengthening against the euro and the British pound by 0.3%, and against the Aussie and New Zealand dollar almost by about 0.5%. And the same story for some other major currency pairs. Overnight futures trading in the stock market, we have the Dow Jones up about 0.1%. The S&P 500 is currently in the red, down about 0.25%. The NASDAQ 100 is also in the red, about 0.9%. Japanese cash trade putting on a strong gain of 1.8%. A sea of green across the pond in Europe, but nothing spectacular. Australian cash trade putting on a gain of 0.8%, and Chinese stocks continuing their rally, up 0.5%. On the share price front, Apple putting on a gain of 1.7%. Tesla putting on a gain of 4.7%. That's what I want to see. That's what I want to see in Tesla, not this 0.8 crap. 0.8% garbage that we saw yesterday. I want to see big swings in Tesla, because that's how it works. Up 5%, down 5%, up 8%, down 8%. That's what we have to see in one of the largest corporations on the planet by market cap, trading at $700 a share. Microsoft putting on a gain of 2%. Amazon up 1.8%. Facebook up 3 1/3 to round it out. On the commodity front, WTI at $65.50 a barrel. Brent, $69.12. Natural gas, $2.67. Gold and silver getting hit overnight. Gold at $1,709 an ounce. Silver, $25.69 an ounce. Uncle Sam's 10-year junk note yielding 1.59%. So a reversal back to the upside. And getting back to Tesla real quick, Bloomberg was covering some more stories with respect to the rumors out there that Apple Apple is considering becoming a car company and manufacturing their own line of vehicles. Now, this story has been out for a while, but it continues to gain steam. Now, what's going to happen to Tesla? I mean, by previous logic, this is going to make Tesla a $1 trillion to maybe a $3 trillion company. I mean, that's the logic, because it doesn't matter the competition. In fact, the more competition there is, the higher Tesla seems to go. The fewer cars they sell, the less profit they make, the higher the stock price seems to go. They're already bigger than several of the largest car companies on the planet. Well, if you throw another one in there, Apple, that has huge brand recognition and brand loyalty, and Apple is what, a $1-2 trillion company by market cap? Well, if Tesla's going to outdo them too, well, then they're going to have to be a $2-3 trillion company by market cap. This is how the world works in 2020 and 2021. Anything you ever learned in college about finance, stocks, how you're supposed to price them, bonds, economics, anything, out the window. It's garbage. It's garbage. At least for the time being. There's going to come a day when it catches up with reality, and that's going to be brutal for everybody. But until then, the ride keeps going. Like I said, it's all about the liquidity. Liquidity keeps going up. Stocks are going to keep going up with it until it doesn't. ECB out today. Well, we're going to keep doing what we got to do. We're going to keep expanding our balance sheet. It's going to run out sooner or later, folks, and it's not going to end well. Believe me when I tell you. So that's another story that you're going to have to pay attention to with Apple coming online. If they're going to be manufacturing it themselves, if they're going to partner with somebody else, chances are they'll manufacture it themselves because they're going to want control of the entire process. Chances are that's what's likely going to come. And I imagine they're going to get involved to some degree at some point. That's all. That's all. Just want you to be mindful of that. But that's market performance. Initial jobless claims, we'll get to that official report now. For the week ending March 6th, seasonally adjusted number comes in at 712,000. Non-seasonally adjusted figure comes in at around 709,000. That's a decrease week over week for both of those figures, seasonally adjusted and non-seasonally adjusted. For the week ending February 27th, this will be for continuing claims. Seasonally adjusted comes in at 4.1 million. Non-seasonally adjusted comes in at around 4.6 million. Week over week are both declines for both of those figures as well. For the week ending March 6th, with respect to the PUA program, Pandemic Unemployment Assistance, now stands at 478,000, a week over week increase of nearly 42,000. The grand total, when taking everybody who is still claiming some form of unemployment insurance, regular state, federal employees, newly discharged veterans, PUA, PEUC, extended benefits, state additional benefits, and work share, gives us a grand total of 20,100 some odd thousand. So over 20 million. That is a week over week increase of nearly 2.1 million. And this is for the week ending February 20th. Recall the grand total lags by a couple of weeks. And again, that grand total is slightly above 20 million for a week over week change of nearly 2.1 million. We have seen a lot of volatility in this grand total over the past several weeks. Up 1 million, down 1 million, up 2 million, down 2 million, up several hundred thousand, down several hundred thousand. Something is broken. That's what this tells me. Something also tells me that the official 6.2 figure for unemployment rate is also wrong. When you continue to see these types of numbers, it is not adding up. The biggest gains for the grand total came in PUA, almost 1.1 million week over week change, and with PEUC, 986,000. The only decrease was 146 individuals for newly discharged veterans. So when you take this grand total of over 20 million, divided by the denominator that the report provides us with, it gives us a de facto unemployment rate of 14%. That is more than double the official rate, and that's 40% higher than what the chair of the Federal Reserve says it is at 10%. Heads or tails, how do you make any sense of all of this? I mean, why are all these people laid off too? I mean, weren't they supposed to be saved by the PPP loans? Weren't they supposed to be saved by the Nobody Cares Act? Where's all this money going? All of the states and cities and localities that are getting bailed out with this $1.9 trillion piece of garbage? No responsibility, no accountability, no leadership. Just print the money and take care of who you got to take care of to get the votes. That's all this is. And the markets love it. The markets love it. Tens of millions of Americans continuing to claim some form of unemployment insurance. So they're out of work, unemployed, underemployed. Food bank lines, evictions, markets rally. The wealth, income inequality is getting worse. This just sets the stage for so much that could go wrong in our political arena, in society, and obviously in the economy as well. But nobody cares, because as long as their account goes up, it could be at the expense of the heart and soul of the country. Nobody cares. I'm telling you, this is no longer a nation of laws. It's a nation of men. This is the jungle, everybody for themselves. That's all this is coming down to. It's all it is. Maybe that's all it ever was. I don't want to believe that, but that's most definitely what it is now. Because these people continue to think that they can spend, borrow, and print money into existence and that there's no cost to this. There's a big price tag for this. We are printing, borrowing, and spending the equivalent of some of the world's largest economies. We've done it in 1 year. We're doing it right now this year. Several $1 trillion a year deficits. If this was free, if this was the panacea, if this was the solution, why did it take mankind this long to solve this riddle? If there are no negative consequences, if there are no limitations to this, and nothing bad can come of it, then why stop at 1.9 trillion? Why not make it 9.9 trillion? You really want to have a good time. Just keep adding it to it. Why give people $1,400 checks? You could have gave them $10,000 checks. Wouldn't that have been better? Nobody asks these people these questions. They're very simple. They're very commonsensical. What's the limits? Why are you doing this? Where's the oversight? Who can overrule you at the Federal Reserve? If you guys make a decision, interest rates are going here, reserve requirements are going there, which, remember, reserve requirements are back to 0%, which means, mathematically speaking, there is no limit to how much the banks can lend. Okay? I know we've had this conversation. It's been a while. But their reserve requirements are down to 0. Mathematically, it means they can basically expand their money supply. That's what it's done. That's what fractional reserve banking is. It allows the banks to expand the money supply as long as there is some type of demand for a loan. And of course, with all of the intermingling that banks do with demand, with deposits and this, that, and the other, who can make heads or tails of all of it? And I'm sure one of the reasons why this is, obviously it's an emergency. It's an emergency. But it's also so the banks can help purchase Uncle Sam's debt, which the banks are some of the largest owners of Uncle Sam's debt, along with the Federal Reserve, obviously Social Security. Most of it's in-house. Most of it is in this country. Most of it's in this country. So don't get bogged down by saying, it's the Chinese that own all this stuff. And they've been getting rid of it. They don't want it. You know why? Because it's garbage. It's garbage. It's junk. So is their debt. Their debt's junk too. European debt is junk too. That's why it's all central banks. This is a central banker's world. They're buying everything. Everything. They get to print money, better known as counterfeiting, and then they get to go out and buy real assets with it. They can buy bonds, they can buy stocks, they can buy real estate, or they can give it to their friends. Because maybe they're barred by law, depending on the central bank, as to what they can actually purchase. But they can give the money to their buddies, and they can go out and buy whatever they want. You do that, they're going to lock you up and throw away the key. Markets rally, $1.9 trillion sign, jobless up. So we'll see what happens tomorrow with the markets. We'll see what happens with obviously the politicians. What are they going to come up with next? What are they going to promise us next? How much more? Because they're just getting started. What's the next emergency? Oh, yeah, that's right. What else did President Biden say today? Oh, we can have small gatherings, hopefully, on the 4th of July. We have small gatherings on the 4th of July. But you better be careful. You better be careful. Because if you don't abide by the rules, and cases and hospitalizations and everything go back up, well, guess what we're going to have to do, children? We're going to have to lock you down again. We're going to have to put on more restrictions again. And we don't want to do that now, do we? This is a Milgram experiment. That's all it is. How much are people willing to tolerate an authority figure telling us what to do? It's what it is. You'll enjoy that if you're not familiar with it. If you are familiar with it, brush up on it. Because that's exactly what we're living in. That's what it is. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.